Hey everybody, Matt Johnston here. So I have seen some interesting social media in the past couple of weeks. The fun thing about the social media things that I am seeing is this notion that is being posited by a bunch of people who clearly don't know any better, that if you form an LLC, suddenly all of or some of your personal expenses can magically be transformed into business expense deductions. I am here to tell you that is not true. Period. End of story. It's simply not true, ladies and gentlemen. If you form an LLC for a business purpose, your business expenses, the things that are incurred for you to conduct the business of your company, those are deductible. But your personal expenses are not going to be deductible. They never were, they never have been. So when you create a limited liability company, you are creating a legal entity. That legal entity has responsibilities to the state in order to maintain the status as a legal entity. So first of all, you have to register with your state. Forming an LLC in a particular state can range anywhere from $50 to $400 or $500 in application fees, period, just to apply to become a limited liability company. And in most states, in fact, I don't know of any states that don't have at least an annual reporting requirement with some amount of money that has to be paid annually to the state in order to maintain your legal status. So here in the state of Maryland, just to give you an idea, the cost to form an LLC is $194 if you choose to do it online. So that's a $100 filing fee, a $50 expedited fee, a $20 return fee to get your documents back, and a $20 fee for, I forgot what the other thing is, for certified copies. So all of that plus $4 in order to do the online bank fee or bank transfer fee. So you've got to pay $194 just to form your LLC, and then every single year you have to pay a $300 personal property return fee, which must be paid. That sort of keeps you alive. And then you may have to pay personal property taxes depending upon the nature of the equipment that you have in your business. That's in the state of Maryland. Other states are going to have different requirements, and so your mileage and therefore your expenses may vary. But let's take a real case, one that is legitimate, that you might be able to have some personal deductions. Let's say during the pandemic you decided to be one of those people who decided to work as a DoorDash driver or Instacart driver or some other similar driver, delivering things in your personal car. If you are using your personal car to conduct business, you may deduct the mileage. The General Services Administration of the United States government publishes a rate for privately owned vehicles that is considered usable. The IRS considers those reasonable deductions. But be careful, you have to make sure that you are deducting actual business expenses. So for example, if you are working as an Instacart delivery person and you receive a request and accept a request to go shopping for somebody, your drive from your house to the grocery store, that's one leg of your work, or that's one leg of the task. Then from the grocery store to the home where you're delivering it, that's part two. And let's say you accept a third, another delivery, and so you go to another grocery store and then to the second delivery spot. And then from the second delivery spot, you decide you're done and you go home. Okay, fantastic. The only things you get to deduct as business expenses are from the first grocery store to the first delivery, from first delivery to the second grocery store, and second delivery to the second grocery store to the second delivery. That's all you get to deduct. Your drive from your home to the first grocery store, that's commuting. It's not deductible. Your drive from the second delivery site to your home is commuting, not compensable. So you cannot deduct all of that time, and you can't deduct that mileage that you do for your commuting time. Okay? And oh, by the way, you should also keep track of all of those things and all of your Instacart job tickets, because at the end of the year, you need to be able to substantiate that's what you used your personal vehicle for. All right, so let's get back to this notion of personal expenses. What happens if you decide to ignore the law and try to deduct personal expenses from your LLC costs, from your LLC operations? So the first is that you may end up in a little bit of hot water with the state in which you are registered, because you are not exactly doing things the way you're supposed to be doing. You could run into some tax trouble with the IRS. More on that in just a second. You could run into some tax trouble with your state and potentially locality. But let's leave aside your potential tax liability and let's talk about something called alter ego recovery. And when you form a limited liability company, the whole purpose of the limited liability is to limit your personal liability for obligations of the business. So in most states, it's pretty hard to get behind the limited liability shield. Here in the state of Maryland, the only thing that's been upheld is fraud. But one way to get behind the legal liability shield is for the legal entity, the LLC, to be considered nothing more than an alter ego of you. So if you're using your LLC to pay for your personal groceries, gas, gifts, veterinary care, what have you, then it is possible for somebody to say, wait a minute, your limited liability company doesn't exist apart from you. It's just part of you. You're just using this thing over here to pay for your personal expenses. So the liability shield should not continue to exist. And it is possible for the liability shield to then be demolished, and now your personal assets are just as much at risk as if you had never had an LLC. So if you're going to have an LLC, then you need to make sure you are using it for a business purpose. You need to make sure that the expenses that you are deducting are business expenses that are being done to further the business. So if you're going to Staples to buy office supplies, that's probably going to be okay as a business expense. If you're going to your local veterinarian to have your dog taken care of, unless your dog is part of the business, it's a personal deduction, not a business deduction, and that becomes a problem. Now, our good friends at the Infernal Internal Revenue Service decided to throw everybody a little bit of a curveball. So, in one of the most politically tone-deaf moves I have seen in a very, very long time coming out of Washington, the IRS recently said that they are going to increase the number of small business audits by 50% in the year 2021. So if you suddenly created an LLC and you're deducting all kinds of interesting personal expenses that you think you can, the IRS might decide to take an interest in what you're doing and conduct an audit. And it's not going to be easy. The IRS is not stupid, ladies and gentlemen. They know what they're doing and they will find it out. So, whenever you see all of those things on social media saying, hey, form an LLC and you can then deduct your personal expenses as business expenses, please don't listen to them. Contact a local licensed attorney, give me a call, and we can talk about what you can and cannot do with your limited liability company. In the meantime, everybody take care, and we'll speak to you later. Bye-bye.